The most important thing to understand about futures trading in the month of July is market behavior. And if you don't know how markets trade at the beginning of summer, you're not going to understand how to manage your risk correctly and which strategies to deploy. So when it comes to futures trading in the month of July, for the most part, a lot of traders are starting to adjust their positions, repositioning themselves for a hibernating market, so to speak. Many institutional trade desks will be empty for some, if not most of the month, but depending on what type of market that you're trading, this could mean a lot of different things. And international conflict could spark volatility at any moment, no matter who's at their desk. And there's talk of the Fed raising rates at some point, each of which would have a domino effect on the indices and energies. But for most, it's going to mean an adjustment to your approach so you don't get chopped up inside bad trades you placed out of sheer boredom. Now, with that being said, there's always going to be a short-term scalper population of traders. There's going to be some folks that are still grinding intraday volatility in the month of July. You're going to have traders that are seeking out swing opportunities on the weekly charts. It's just with weaker volume and less liquidity. A strategy that I'm definitely going to have set up in the month of July is a scalp around any liquidity sweep of the previous day's high and low. Now, still, you have to be careful here to confirm enough volume for this move, so check your volatility measures like the VIX and ATR for each market you apply this to. It tends to work quite well on ES, gold, and oil, whose daily ranges can be wide enough to exploit, and less effective on the currencies, copper, and natural gas, where the daily spread is generally too narrow. Now, why does volume matter for this? Well, when it comes to working a liquidity sweep entry, you needed to do what the name implies: sweep orders and come back inside the range. And volume is needed to do that. Make sure the move is intentional, like the one you see right here. But if it starts consolidating around the entry line, like this one, proceed with caution. You can minimize your risk, move to break even, treat it as needed. Now, the trade idea can generate a lot of wins, and it gives you a daily barometer of which direction you're looking to trade. So this is a strategy I love to have at the ready in the month of July. Now, one way you can set yourself up for this trade is by using my free futures trading checklist. It's exactly what I use to make sure all of my entries are solid and as profitable as they can be. I've made it available to you for free. Just click on the link in the description below. Now, strategy number 2 is a bounce trade of my 60-minute lines. If you've watched my day in the life or trading after hours videos, I feature this trade in there as well. And the truth is that once it hits about July, I'm going to have some sort of 60-minute level strategy with me throughout the entire summer. Because remember, things will slow down. Some of these key levels will have a longer shelf life than earlier in the year. Now, a bounce trade is one of the best strategies to catch some really big reversal moves. The big thing to remember about bounce trading is that you really just want to select the level that fits the situation that you're trading, so good trade context is absolutely needed. And usually good bounce trades reverse immediately. So for this, I recommend you're either right or you're right out. But the thing that makes a clean bounce setup so unique is that it rarely takes any kind of trade management, like nothing really at all. Just use your ATM strategies. So stops, targets, and auto break even are automatically set on a filled order entry. And so if it's clean and it's very precise, you can set and forget this trade all summer long. Now, strategy number 3, we're going to combine those two. And it's when you have a key 60-minute level above or below the liquidity sweep candidate we talked about in the first strategy. So for example, the previous day's high. So if I know that price is overextended from above that key level, I really like to set up this counter trend trade and bounce the level on the outside of it, essentially getting in on the sweep early. It's extremely simple. I'm just going to wait for price to extend beyond the first level that I'm looking for a liquidity sweep around, and then I'm going to take a bounce trade on the key 60-minute level above or below it. And a lot of times I like to have my targets right around that previous day's high or low line. So if I can position the entry so that my 2-to-1 target is just in front of the sweep line, feel pretty good about it. Now, if you guys want to understand more about how I trade, book a free call with me. I'll give you an hour of my time for free to dig into trading strategies, gear setup, platforms, or anything else trade related. Just click on the link below and book a time. The sole purpose of this channel is to help you become a better trader. So please like and subscribe. And I'm going to leave a video here that I did earlier so you guys can watch that one next and really understand exactly how I set up my charts for these trades in a complete Ninja Trader tutorial in 7 minutes. Hope you guys enjoyed it. Don't forget to check out the free futures trading checklist, and I will see you soon.